Welcome to TheoTrade. This is Don Kaufman. Here we are, February 24th, 2016. What can you call the market today? Well, if you like volatility, if you like unpredictability in the marketplace, then ladies and gentlemen, this is your market right now. Take a look at the S&P future. So we are still got just about 10-12 minutes to go to the close as I record this, and take a look at the market here on an intraday basis. And you almost have to do a little bit of a double take, because that is a low, an intraday low, which was hit about an hour into the trading day here of 1886, and then you're looking where we're currently trading at 1923. What do you realize? That's over a 50K point range on intraday trade, which is, again, nothing less than staggering. And as we come closer to the close, you'll even see S&P futures, again, fading off of some of their highs in the session over here. Now, a couple of levels we want to talk about, because in the midst of volatility, in the midst of, what seems like complete and total chaos over here, I'll zoom out for just a second and look at a few major levels that were, in fact, breached inside of today's trade. So age-old levels that we've been talking about in the S&P futures. Okay, to the upside, we were looking at none other than 1911. To the downside, 1871. The irony was, earlier in today's trade, we actually breached through the 1911 number, and every time we hit 1911, people always ask, like, where do we come up with these levels? And that's what today's trade is about. Today's trade is about levels in the marketplace. And people always ask, well, how do you come up with these different levels and so forth? And go back to the 1 minute for just a moment, and just want to zoom back, because there is the line drawn at 1911. As you kind of scroll back in trade over here, now we're actually scrolling back to literally the middle of the night. All right, so this is last night. Again, it's if you're watching this today is Wednesday, so we're actually talking about the previous night and how important levels happen to be. Every time we've been crossing right through this 1911 number, we've seen explosive volume. And again, this is in the middle of the night, not driven by any news announcement, nothing like that. We do almost 5,000 contracts in the middle of the night, which, waking up this morning and kind of looking back at this, and no, it didn't wake me up. I didn't set an alert at that level. Nevertheless, waking up, looking back over there, I thought to myself, this is going to be a volatile day. And again, we breached the 1911 number. We come down hard, and earlier in trade today, I thought we're going right back to 1871. You're like, hallelujah! The bears were out, and we exploded. Okay, off of that 1886 level. Now, that 1886, I don't think that holds any weight. What ultimately occurred is, if you kind of zoom in over here, the market is trading right now off of catalysts. Okay, that's it. You have catalysts and you have levels. Okay, there's no sense, if you will, right now of predictability to the market other than specific levels, which, again, I'll talk to you a little bit more about some of the levels that we're currently looking at and looking for here. So the catalyst this morning that actually we saw the bottom this morning, and that was actually the oil report. So, every week I stop and I always say, like, wait, you got to know which announcements are coming out. And every single week I go over, to Market Watch over here, and I look at the calendar, as boring as that may be. And you would have seen the oil report this morning, okay? Obviously, we have some GDP towards the end of the week. Nevertheless, it was an oil inventory report that actually was the catalyst for the upside momentum to the entire market. And every event that we get right now matters more than anything. That's how skittish the market has become. So let's talk about another level, because we already breached through the 1911 now to the upside. And again, as we breached to the upside, we also saw explosive volume. This is intraday volume here, 10,000 contracts trading, and I'm all the way down to a 1 minute chart just to overemphasize some of those explosive volume bars that we've seen. Again, can you imagine this? Earlier in the trading day, we saw 27,000 contracts trade in 1 minute. To the upside over here, one of the key inflection points that we want to look for in markets, and again, this is where I got to zoom out to kind of a daily chart. Okay, look very, very carefully in here. We are looking right at the 1934 level, 1934 level inside of the S&P futures as a huge make or break in there. And, we spurted above them a little bit earlier this week, did it again yesterday. We failed, miserably today, bounced back up. Here we are. In tomorrow's trade, we get above that 1934. I'm telling you, we're going to have room to run. And room to run can be coming back up even just shy, I would say, of the 2000 level inside of the S&P futures. Okay, we're only 75 points away from it. I mean, hey, today we had almost that kind of move. Again, when you start looking at a market that's moved from 1886, all the way to 30, it's staggering to see these kind of intraday ranges, 50, 55, even 60 points on an intraday basis. That's an extreme range. I mean, volatility, it's not dead. Okay, it just took a little bit of a nap for a few days over there in a rip-your-face-off rally. If we get above this 1934 level, look for us to explode again to the upside. There's a lot of momentum behind it, to come off what we thought was going to be, just utterly ugly earlier in the trading day and explode higher is again, that's a real threat to those that are short the market right now. And what you can get is above this 1934 level, you can get some short covering and actually see some big time follow through to the upside. One of the trades that I'm looking at and actually looking for a short position, and you may see me do this in the next few days, Apple, stock that doesn't seem to be able to get out of its own way. I'm looking to enter into a short position in Apple, okay, as Apple starts to crest back up into the 97 region. I'm actually going to look for a shorter duration short position in there, and that's most likely I'm going to be taking that position by buying a put spread. I'll be anywhere from 29 to 37 days out in time. I'm looking for like a risk one to be able to make one scenario over there. But again, I'm trying to get you guys ahead of the curve and get you looking yourselves for these types of trades that are going to exist. Nevertheless, I'm looking to short Apple, the stock that can't get out of its sway. Wouldn't surprise me to see even Apple is a mid-80s stock the next time we do have some sell-side activity. Nevertheless, though, market strong right now into the close. Again, coming way off the lows of the session. The bond market, it's the talk of the town. I mean, again, to reiterate, volatility in a marketplace, if you look at the range of bonds today, it's nothing short of spectacular. And it just tells you how much risk is really on the table in today's market here. So the bonds have not disappointed us by any stretch of the imagination. Gold, spectacular move today. Okay. And last, of course, but not least, oil, which was the catalyst inside today's trade. So over the next few days, again, keep your head in the game. Look for the 1934 level inside of the S&Ps for us to breach above it. We breach above it, we got room to run to the upside. Thanks a lot, everybody, for joining us here. My name is Don Kaufman at TheoTrade. Have a great evening. Bye-bye.